All right, guys, we are live. We're almost at 9:30. Almost about to start seeing some bars opening up here. We'll go ahead and draw in my overnight highs and lows. Let me get a line here. And there. Oftentimes, I'll draw in these overnight highs and lows, and it kind of gives me more context. Gives the open targets to hit. Right, the open kind of likes to test both ways sometimes, and the overnight high and low acts as a couple of those levels that it wants to get to. I don't know where that just went. All right, so we're opening up in the middle of yesterday's final range here. So that increases the chance that today will be a trading range. We're going to probably look for the open on the first couple hours to test both up and down to try to test both areas of this final leg to see where the market really wants to go today. Looking at the daily chart, market gapped down yesterday and pretty much immediately got to selling. There really wasn't any tail on top of the bar, and it closed pretty strongly, so there was a minimal tail on the bottom. Now, where did the market go down to? I had this horizontal line drawn in yesterday. It went down to a prior low here. So whenever you see the market starting to sell off quickly, it normally wants to go to the most recent breakout in the other direction. And that breakout started here. On the 5-minute chart, I have that line drawn in here as well. Let me drag the chart over so we can see what that would look like. So here, that's where the market tested down to. And so anytime you see a sell-off like this and you want to see where it might be going, you can just move your chart over to the left. And the first time you see a low of the day like here, you can draw your line in. And that's exactly where the market worked all day to get down to that. And at the end of the day, it finally gave up and went to it. BP, good morning. BP, do you trade the E-mini or do you trade other markets? What kind of what do you normally look at? Yeah, absolutely. So currently we're doing probably a couple live streams a week. In the near future, I like to be doing it, uh, most days of the week. Yeah, you look at the E-mini, Nasdaq, crude, Russell, gold. Yeah, so I have all those up except for the Russell. Yeah, except for the Russell. So 10 seconds left on the first E-mini bar. So it's already managed to test up to the high of this range and the overnight high. So that's good. So now my premise is that at least the open will be a trading range. Uh, Oftentimes when you open near yesterday's close, when you open within yesterday's range, it's an increased chance that the whole day will be a trading range. But the way we have, so let's just look at the daily chart yesterday. This is right, it had a very strong bear bar. If the bears had all that selling yesterday, what do they want to do again today? They want to be selling more. And what did a lot of them do at this close yesterday? Probably a lot of them probably a lot of them sold this close. So as this market pulls back, they're interested in selling more higher, so that they can sell it back down to get to this close. And in general, when you see a close like this, or just a low like this, the market is interested in getting back and testing it. So now we've already tested up to the high of this range, and this last few hours of yesterday was in fact a trading range. So now that we've tested up to the high of this range, what the bears want is the bulls to attempt to go higher and then fail, and then they'll be able to sell it off down and then test the low down here. So the market wants to test the close of yesterday, it wants to test the low of yesterday, it wants to test the overnight low. So I think we can expect a lot of two-sided trading today. So I have my second monitor set up now, so it'll just make things a lot easier with showing you guys things. Basically I can control everything from my other monitor instead of having to squeeze everything onto one. Let's look at the news for today. So at 8:30 we had 3 news events. Average hourly earnings up a little bit. Unemployment rate unchanged. The big one, non-farm employment change. So we were forecasting 106, and we're actually at 12K. So that's it's quite a difference there. So we were forecasting somewhere up here, this yellow, but we actually were down here. So so the euro dollar, as we can see, it's down a little bit off of that news, from the gap down. Let me pull up the overnight. Let me pull up the 24-hour chart just so we can see how the forex market reacted to that news. Yeah, so it's significant breakout up, but then that breakout failed, and now we've basically reversed all that move. So E-mini first bar, bull bar, second bar has 50 seconds left and is looking like it's a bulls might be able to get a chance of getting a second bar up as well. So normally, when you get two bars on the open that are closing strongly, so if it closed something like this where it's has a minimal tail on top, so two bars in a row, minimal tail, decent bodies, something like this, then from that point it's considered always in long. So you should really only be buying if you see this. I think if the context was different, I think this would be this. I think this would be reasonable to buy the close this bar. However, we can see, just off of this chart, this trend has been down. Yesterday was a big sell-off. I think there's going to be more sellers at some point today. And I'm also thinking the market wants to test down here. And I think this move up now is just to test like this high. And so from these bars, this is a good buy, but the context is poor for this being a buy, because we're in a bear trend and now we'd effectively be buying on a pullback in a bear trend. So I might be looking more for some sort of wedge pattern on the open, or and then wedge pattern or some sort of double top, some sort of reversal pattern that would lead for the market to sell off, to try to test back down here after yesterday's strong sell off. Do I enter off the 2000 tick chart? Yes, I do. If the market is in a trend, so like in this big sell-off, I'll try to be looking for. So if I see this, I'll try to go down to the 2000 tick chart and look for pullbacks, the moving average that I can sell, and go for a swing. So looking back at the news, 10 o'clock, the Manufacturing Purchasing Managers Index. So since this is a red flag event, we just want to make sure we're staying out of a trade at that time. And this won't be too significant, but it could probably, it might give the market a little bit of a spike. So we just want to make sure we're not entering a trade before then. I think if we wanted to enter here, that'd be fine. We still have 20 minutes, but I don't want to be out before that news came out. So market might get a third bar here. Like I said, I'm not really interested in buying. So the middle of the day was right here, and we've broken above that, which is, we've got a strong close above that, which is good for the bulls. But 50% of strong moves on the open reverse, and I think the context that we're in is especially good for a reversal to be occurring. So like I said, maybe some sort of wedge top, like there's better examples further that I know of that are further back. So here's an example. Wedge top is 3 pushes up. This first one, a second push, and a third push. And strong bear signal bar, and then the market just collapsed after that. So we can see, that there was buying, but then ultimately what you should be looking for is the reversal. Here, this is another wedge top. So first push, second push, and a third push. And then you could also call this possibly the third push. And opening reversal, ultimately that market gave up going higher and then collapsed down for the rest of the day. So I'm expecting reversals. I'm expecting a trading range market, at least on, I could see the whole day being a trading range, because it'd be a large trading range because we have areas that test higher and lower, but I would expect some large reversals for today. It could be my volume. I'll do a test here. Test. Yeah, I could probably keep the mic closer to my face. Hey, good morning, Sniper. So market's now gotten 3 bull bars up. This most recent one is a doji bar. So it's kind of meeting the minimum requirements for the bulls, but it's not really what they want. All right, I'm gonna click through some other markets here. We have crude. Crude had this big breakout yesterday here, this 5-minute bar. And what I did was I drew this measured move. So anytime I have a big breakout like this, I'll draw a measured move up. Yesterday we were able to get some buying, but we didn't get to that measured move, and so today that'll still act as a target for today. So crude probably still wants to get a little bit higher. Gold, looking fairly correlated to the mini right now. So bulls are trying for a fourth bar up. Yeah, I think just, as they get farther from the moving average, as they get higher up, they're gonna find more sellers, not more buyers. I do not expect this to be a big bull trend day. That I don't expect this to be the low of the day, and then for this to be a big bull trend day. So this was good for the bulls, though, closing above this prior bar. The close is really important. It's signaling to the market how strong that side is. Looking at yesterday's sell-off, market had a big gap down. When there's a big gap, that increases the chance that today's going to be a trend day, which is what we saw. Now the second half of the day effectively was a trading range, but from the beginning to the end, that's a big sell-off. Some trade ideas. I'm going to go over just some trade ideas that like someone else might do, and then I want to talk about something that that's more my style. So, I don't do too much trading on the open. I usually avoid the first 30 minutes or so. I think after this big sell-off, first bear bar, bull bar is a pullback, and then you get a second bear bar on this third bar. I think that'd be a reasonable area to swing. And of course, in hindsight, it's easy for me to say because I know this happened. But what do you have? A big gap down, so trend is more likely. Then you have a double top and a bear bar to sell below. So you can risk 5 points and then go for 20 points, which put you down here. Or you might recognize the size of the bars, the magnitude of the sell-off. So you could say that the day will have a larger range. So maybe you go for 50 points, and you get out down here. As you see the sell-off happening, you can take these swings below these bear bars. So like if I'm selling below any of these bear bars on these pullbacks, I think you need to be going for 2 times your risk, like something like that. But when you see a sell-off like this, a couple things to note: these gaps here, the low of this bar and the high of this bar, there's that open area there, and that's a gap. That means that the bears were strong. So when you see that gap and then that bear bar, that increases the chance that your sell there will be profitable. Here, there's a gap. It's a body gap, so the bodies don't overlap. So you have this close here, breakout, then this close. They don't overlap. The tails overlap, which means it's not as strong as a pure gap like this, but body gap is still good for the bears. Then you get a body gap here, and then you actually get a true gap here. So you're getting these gaps. And so when you see the sell-off happening like this, that's when I would drop down to the 2000 tick chart. and these bear bars back to the moving average, like here, and any of these, be taking these and go. You can go for 2 times your risk or more. You can go for 5 times your risk if the sell-off is strong and it has targets below. And guess what? You're going to lose some of them. It's a pullback to the moving average. If you sold below there, you would have lost that. If you were trying to sell during this pullback, you would have lost. Then look at all these that did win. So you have to understand you're going to have some losses in there, but if you're recognizing that it's a strong enough trend and there are targets below, then I would be hopping in and selling that. All right, so market got a 5th bull bar. Now, these bars are not as strong as the first 2 bars. So first 2 bars, they were good-looking bull bars, closing near their highs. Now we're starting to get more tails on top and smaller bodies. So now, the bulls are controlling this movement up. They're controlling the time and they're controlling the price. So it's good for the bulls. But it's starting to look something like we were showing over here. It's kind of starting to look something like this, where we have these tails on top. And then, you could call this a wedge top, or you could call it a double top with, 1 and then 2. It's not a perfect double top, but effectively that's what's happening here. It's a double top, and then second bear bar. Probably bulls will get out below that. And then if they sold for a swing, then look what they would have gotten there. Relatively small risk, about 4 or 5 points, and they could sell for like a swing down to here. Now the bulls do have a gap here, the high of this bar and then the low of this bar not overlapping, so that is good for the bulls. But we're on the open. I think the context for this, like we were talking about gaps here, the context for this sell-off is better than the context for this to rally is. BP, you're talking about we may fill a gap. I assume you're talking about this gap here. And go ahead and draw on my gap region there. So it's possible, if we look at the daily chart, we're basically assuming it's going to come all the way back up here, which it's possible. I don't think that's likely to happen today. But while we're on that topic, let's talk about how today is Friday. It's the last day of the week. So we have Monday, Tuesday, Wednesday, Thursday, and Friday. So right now, the weekly chart, it opened up here, has a small tail on top, and then it has a fairly large bear body with a tail on the bottom. We opened here, went up a little bit, big sell-off, and then pulled back some. So right now, the bears have this. The bears are owning this weekly bar right now. What they want is for it to close on its low, so that can have added selling pressure going into the next week. The bulls want to create as big of a tail and bottom as they can to decrease that selling pressure. So imagine if the bulls were able to buy it all the way back up here, then that would have a giant tail on the bottom, and it could actually be considered like a bull signal bar to buy above on the weekly chart. That's unlikely that would come back all the way, but these are what this is what the big players are thinking about on Friday. They're saying, what can we do to impact the close of the weekly bar? Because that'll be important for their positions going forward in the next few weeks. So bears looking to sell off, bulls are trying to create a tail on the bottom of the weekly. Could you also use a 2 minute or 1 minute? Yeah. So like if you're seeing a trend and then you're interested in getting in on the trend, going to a lower time frame, yeah, using a 2 minute or 1 minute is fine. So we can see this rally is definitely weaker than, these compared to these first two bars. These last 5 bars have been weaker. You could possibly draw on a wedge now. So this would be the first push, and the second push, and here's the third push. Now we still have 4 minutes. We have to see how this bar closes, but this is how I would draw on the wedge if the bar closed like this. Going back to our example again. I'm going to take a screenshot of this so we can just quickly pull it up instead of having to go back and forth. So we can see these tails on the top are where the those pushes. That's where we're counting for, like, the 3 pushes in the wedge. And we're kind of starting to see something like that here, first, second, and third. So then, if we're just going off of this, we might get one more push up that fails to go higher, and that would be the last push before getting a sell-off. So we'll kind of monitor that. So I just wanted to talk about yesterday some. So we went over ideas on how to sell during this. Something that I did yesterday, I also went long during this. So every day touches the moving average. So when you see this sell-off that's getting extended and it's been away from the moving average for a long time, the odds that it's going to pull back to the moving average start to increase. So after we've been away from it since the open, we're getting down here around 11:30. The market is starting to likely probably get oversold a bit. We're leaving the open and we're starting to go into the middle of the day. So as we transition into a different time period in the day, we often transition the type of market that we're in. So I was starting to expect more of a transition into either a weaker channel or a trading range. And so that's what we got, was a trading range. And far from the moving average, it touches it every day. We're pretty deep into the sell-off now. So after you get this double bottom here, so attempt down here, pull back, second attempt here. I used a small position and I bought above this, and I got out with just like a scalp profit here. And my plan was that if I bought here, I traded small enough so that I could be able to buy more lower if needed. And so you can see, so if someone didn't get out here, they could have held on and bought more here. They would have, or they didn't have to buy. They would have no issue getting out of their position. And then let me touch the moving average there. So notice, based on what I'm saying about every day touches the moving average, I'm not saying, we're far from it here, we need to buy, because the market can get much more oversold before the sellers leave and the buyers get back in. Also, the moving average can move down to the price instead of the price going to the moving average. So it's kind of like here, we basically went sideways. So it wasn't so much the market going up to the moving average. It was the moving average being pulled down to the market. So, buying in a move like this, buying is it's more of a mean reversion trade, but you need to be thoughtful on how you're doing those trades. You need to be waiting for an actual setup to occur, and you need the market to really start to be overextended instead of just um, instead of hopping in too prematurely. So I had a reason to be able to buy here. We were already late in this trend. We were transitioning into the middle of the day, and we had a double bottom. So for those reasons, that's why I was able to be confident enough to buy there. All right, so now we have a reasonable case for a wedge here. 3 pushes up, strong bear bar. Looks like this isn't the end of the buying yet, but now we know that bears are making money selling above bars. So, the bears that sold even this close, bear that sold this close and sold more higher, they've made money now. Bears could sell below this bull bar, and they were able to make a scalp. So bears are able to make money now, which is different from what was happening during this. So I think, the bulls will probably want to test up a couple more times, and maybe they are able to continue up, but we'll be looking for that reversal down to happen soon. So this is our example of the wedge. So this pullback here is like this pullback here. Then we got one more push up before that failed. Let's see. So here was the news for the 10 o'clock. And, market didn't make too big of a deal out of it. Well, BP, you're welcome. I'm glad it's, I'm glad it's valuable for you. So this bull bar is starting to get fairly large. I was going to say it was getting large enough that I would suspect that there might be some actually be sellers of the close instead of buyers of the close. I'm going to glance over at some of the other markets real quick. Possible double top on the crude. It's been attempting to get up to this measure move, and it's been unable to, so possibly swing sell below there. But if you are doing that swing sell, you need to be betting that it's coming down here. You can't just be trying to sell back to the moving average, because you're going to lose this most of the time. So when you win, your profit has to be big enough to offset those losses. Gold short, kind of stuck in between the two moving averages and kind of in a trading range there. So now as we look at this, this might end up being the third push in the leg. So like first push, pullback, then this all would be a second push up, pullback, and then third push. So we're still on the open. We're still in that category of 50% of moves on the open reverse. This is still a move on the open. So what's good for the bulls? Well, the first 6 bars were all bull bars. We also had a gap here from the high of the first bar to the low of the fourth bar. That's good. We haven't really, we haven't like closed that gap. That gap's still open. The bulls were also attempting to make another gap here. So the bulls are still, the bulls are still strong. What's good for the bulls? Also this close above this prior high. There's a nice pullback off the 2-minute time frame at 10:06. Yeah, so I think if you were monitoring the 2-minute chart like that, yeah, we've been in a bull trend, couple legs of a pullback here, good looking bull bar above the moving averages. Yeah, so if you were monitoring that, then I think that'd be reasonable for a swing up. I wouldn't take it for a scalp. I wouldn't go for 2 points. I'd want to be going for at least 2 times my risk there. But yeah, I think that's the idea. That's what to be looking for. So 5,800 is getting close. 200 moving average is getting close. And, the high of yesterday are getting close. So we are starting to get targets up here that the bulls might just go ahead and rush up to it just in one or 2 bars. Then from there, we might have a larger wedge. So this all would be one push, pull back, second push, and then a third push would be that push to get up to these resistance levels. And possibly from there, the market would have that wedge, have a larger wedge, something like this. And then from there, you might be able to see that sell-off occur. I don't think the bulls are just going to be able to have a straight up day. Even if today ends up being a bull trend day, I would expect some deep pullbacks in it. So this is good for the bulls. They have a gap here, high of this bar, low of this bar, and they got a good close. Closed above all these previous highs, so that's good. So it looks like the market's going to try to get up to 5,800 and these other targets above before trying to reverse. This is what the 15-minute chart looks like. Three strong bull bars. So the 15-minute chart looks looks fairly strong on the 15-minute chart. Looks like it would get at least a little bit more up from these three bars. So it looks like in the short term here, the market has a little bit more up. Yeah, Sniper. I think heading to the 200, heading to open of yesterday, heading to 5,800. Yeah, whenever you see lots of like targets kind of in the same area, that's a good sign that the market will try to get to there. So once it gets up to around 5,800, 5,810, what's more likely that we continue to break up or that we reverse and go down? I think it's more likely that we would reverse and go down. I'm getting the feeling like we'll have a larger wedge pattern here, and from here it's gonna be something like this. So that'd be like the top of the wedge there. The three pushes up, and then we'll try to go higher a couple times, and then something kind of like this, and the sell-off would start down here because we have targets to test above, but ultimately we have this close of yesterday that the market wants to get down to as well. I was actually considering selling the close of this bar. And what kept me out of selling the close was from this wedge. Whenever you have a wedge that fails, the market often will have a strong breakout above. So wedges are supposed to work. Now this one never really triggered because it never went below this bear bar. But wedges are supposed to work, and when they don't, when something that's supposed to work that doesn't, then you can expect a strong move in the other direction. All right, so we just got a third bull bar. So multiple consecutive closes above prior bars. We're still getting another gap here. So if our 200 moving averages look different, uh, might be because I have my time frame set to 9:30 to 4:15. So if you have yours on a 24-hour chart, then it's going to have different bars that it calculates it from. Peek over at some other charts here. Bulls trying to get another gap up. So gap here, and gap here. So all signs that the bulls are strong. I think at some point soon, this buying is going to dry up as it gets to these targets. Bulls feel like they had some traders trapped here when they were buying. So they were able to buy these closes. They were getting gaps. As we get closer to 5,800 and, the moving average and yesterday's open, that buying is going to dry up because people that bought through here, they've made all this money now. Then now they see they're getting to the resistance levels, so they're not going to be as eager to buy as they get up here. So this will be important for the Bulls. Can they get another bull close, or will the Bears be able to have a bear body? So still good for the Bulls. They're able to avoid that bear body. I mean, looking at a short, well, not yet. And I we really don't have a setup for a short yet. I think, like, could someone just blindly sell up here, um, and make money? Yeah, I mean, they probably could, but it's better to really wait for this whole pattern to play out before looking for shorts. I mean, well, the bulls are getting these gaps, and they're still getting the gaps. So, while until I see that the bears can make money, um, then I don't want to just jump in and be selling. Like the setup for me would be getting some sort of wedge pattern here, like first push, second push, and then a third push up. Maybe that's just testing the moving average, testing yesterday's open, and that ultimately fails, and then we can get a bear bar to sell below somewhere over here. That's kind of what I'd be looking for. However, could you just sell at like 5,800 and some more higher and some more higher, and then get out on the pullback down? Yeah, I mean, I think most times, I think most times you're going to be able to make money from that. But you have to trade small. You have to put up with the chance of having the market just continue up against you. You know, you have to trade so small that, like, yeah, I mean, you'll get like a profit most of the time, but it's a small profit, and then when you lose, you could end up with a really devastating loss. And it's kind of like, over here, like we were saying, we know every day touched the moving average. Market was starting to get a bit overextended, but instead of just buying blindly, it's better to wait for a setup to occur. So you have some context, you have something to kind of grab onto in the market. Has today touched the moving average? Um, I mean, maybe you could say it has. However, effectively, you could say it hasn't. This market will act as if it hasn't touched the moving average yet. All right, strong bull bar, but this bull bar is coming later in this trend. We've been up for 12 bars now. This is the 12th bar of the day, and it's one of the larger bars and is later in the trend. So I think some people will start to, like, sell the close of that bar. They'll trade small and they'll scale in higher. our wedge example doesn't look so similar now that we've had this stronger move up here. But I think if we're patient here, I think that wedge will. My premise is that the wedge is still going to form. So the market's now touched 5,800. And in fact, actually what it's doing now, since it broke out above it, it's coming back and it's testing it now to see if 5,800 will act as support. Glance over at crude. So we were talking about this bear bar being a possible short for a swing short there. And when you're taking this kind of swing short, that would be really a short for the high of the day. So if you're selling here, you're not going for a couple points. You're trying to bet that this will be the high of the day here. And you want to be going at least for 2 times your risk. Now that we're getting this kind of sell-off, possible target might be the start of this bull spike here. I think if I had sold here, if I wasn't already out on my full position at 2 times my risk, then I would get out partially above a bull bar. This is how the daily chart looks now. Big down, big up. This increases the chance that we'll have some sort of trading range. So like next week, if next week opens in this range, then we'll probably get some trading range bars. Bars that kind of look like this. Almost a continuation of what this week's done, but just down here. All right, so bear bar. Do we sell below it? Why wouldn't? This has been so strong up. And to me, we really don't have a this is just basically a first attempt down, and I'd like to see a second attempt down. But we can draw in. Here's a first push, then this is the second push. So I want to see the bulls try to go up one more time, and then from there, it'll give us information on how strong they are. This is just the first pullback after this move up. something we can watch for as well. Something else about information that we can collect. When the bulls, when the market's moving up like this, people are buying the close of each of these bars, including this one. So people will buy the close, and basically betting that either it continues to just go up and they make money, or they'll be able to buy more lower and scale in and make money. And they bet that the pullback won't be so strong that they wouldn't be able to get out without a profit. So they'll buy this close as well. And if the market pulls back up here, that'll give us information on how it reacts at that level. Because imagine if you bought here, and now the market's doing this, is down here. You're starting to feel a bit nervous about the position, but if you traded small, you can buy more lower. And then when it comes back up, you're probably trying to get out break even at that price. And so we'll see how the market kind of bounces around and reacts at that level. Because if it can't get all the way back up, that means the bulls are still in the position, and they might be trapped in their long position as it sells off. Okay, I think the delay is about 20 seconds. So in the future, we'll do the live streams on Discord. And that Discord should basically have no delay. So I think around 11:30 today we'll end the stream, and then for like lunch, and then around like 12:30 we'll get back on. And I think I can adjust some settings on the YouTube here to make that delay less. So I'll see if I'll do an afternoon stream as well, and I'll see if I can get that delay decreased. But in the future, we're gonna do it all in Discord. So BP, I think you're already a member of the Discord. This is odd. Welcome, Big Guy, to Big Guy Trades. That seems a bit yeah, we get some people that are trying to act as me. Report. Yeah, there's I'm surprised at how many fake big guys there are now. But yeah, so on the Discord we would just have like you can see the live stream here, and that's where we would have the live stream. Cool, you're already in the live stream. So bulls that bought this close, they're not feeling too good after this. However, I still expect the market to try to test back up. So why do a lot of traders avoid the open? Well, two reasons. One is that it can be sporadic. The volume is very high because everyone is kind of coming and they're dumping their positions long or short. Um, the big funds are very active at that time, and they're playing a game that's different from the game that we play. They have a lot more of that the high frequency trading. Their positions are much larger. Um, that's a game that we can't play, and that's a game that they play a lot on the open. Um, a second reason is that the open, we we don't know what the market's going to be like yet from the open of the day. Like I said, 50% of strong moves reverse on the open. Um, when something like later in the day, a strong move would be more likely to have um, follow through instead of reversing. So if you only trade later in the day, you know what the market is, how it's acting. You can see you have more price levels for the day. Like we have this low, we have this highest close. We know that the market's going to react to those levels. And you can kind of get a feel for what the personality of the day is going to have. So to me, that's why I rarely take trades in the first 30 minutes or the first hour. But if I am taking those trades, then it would be something like trying to short below that, going for a big swing, trying to sell below that, go for a swing. So if I'm going to trade the open, I'm only interested in trading it for a swing as if it's going to be the low or the high of the day. So, all right. So bulls that bought here, they're getting fairly worried, and I think why is this bear bar getting larger? Probably because a lot of the bulls that bought through here are selling out below that bar. Are there buyers at the moving average? Probably. I'm not going to buy at the moving average. I think like maybe if this was later in the day, it'd be a better buy. But with it being on the open, I think that the chances of that, like the chances of scalps, I think decrease on the open. The open is more of it's more of a swing environment. You need to be more selective and only go for swings. So we can see that buyers that did try to buy at that level, they were able to make a couple points at least there. So I mean, the market's it's doing its thing. It's testing its different levels. It's trying to figure out what kind of day it's going to be. It's kind of like a teenager growing up, right? I mean, they don't know who they are yet. They're kind of sporadic. They're going to have a whole range of emotions. They don't really get settled in until in their 20s or later, right? So that's kind of what the market's doing. It's figuring out who it's going to be. You mentioned the 15-minute candle. Let's pull that up. So 15 was able to get 4 strong bull bars. And then you got this really bad bear bar, this bad pullback. Looks to me like trading range. Big up, big down. We're still in yesterday's range, so it also increases the chance of a trading range. And I think on the 5-minute chart, it's kind of a similar story. Big up, big down. I think it's still looking for breakouts though. It's still I think the market still will want to see if the bears will fail, and then it can try to go higher, like up to close this gap up here. It also has these targets down here. So, I mean, to me, we just need to wait for more context to form. I think they're still playing the opening game where I mean, so there are trades to be taken, but I think like the higher probability setups have not come yet. And speaking of, I wasn't quite done talking about yesterday yet. So we were over here talking about he could like buy above this or above this, and probably could scale and lower and make money. This bear bar here, to me, this would have been a good short. And I have videos of shorts like this that are very similar. So big sell off on the open, a few pullbacks. These pullbacks, draw a line in here. These are the bulls attempting to go higher. We're also at the moving average. So bulls trying to go above the moving average. And then you get this close and you can start drawing this horizontal line through here. All these attempts up. This high gets a little bit above this high and then fails. Get one more attempt to go up and then big bear bar. I didn't take that yesterday. I was actually I was not on my computer at that time. But looking at that would have been a good short. And I have videos of pretty much the same exact setup. And you can see how the bulls are failing to go higher, and the bears are starting to take over. And so that's why that would be a good short below. And you can see, right, this is what I'm talking about with context. Like we have the moving average to play off of. We can see which side is in control, and then they are failing to be in control, and then we can take trades based off of that. Whereas here, the market's still like feeling itself out. It's still figuring out. It's still kind of creating its own context. Like this move up, this should have had some sort of follow through, like pull back and a little bit more up, but it didn't. So BP, your last two comments kind of go together. Yeah, some more information is required. That information is going to come. And because of that, yes, I definitely think some good entries will set up. I think actually the best times of trading for me are actually between like 11 to 11:30, and then probably between like 12:30 and 2:30. And the reason for that is, one, you're later in the day, so you have better information, better context. Also, those two time periods, that's before and after the lunch period. And I talk a lot about how the day is broken up into 3 parts of the day. Market has 3 parts of the day. I want to find like a real clear example. And of course, anytime you try to go back and find a good example of something, suddenly it's not there. We'll go with this day as the example. So 3 parts of the day. The first is the open of the day. It lasts till, it could last the first 30 minutes or it could last the first couple hours or so. For open of the day, we have this trading range. This is about the first hour of the day. It's a trading range. Then as we get a little bit later, kind of more into that 10:30 time period, the market breaks out. And then we break out. We have a slight trend down after that. Then once we get into like 1 o'clock, 2 o'clock here, so we have the open, and this breakout is kind of that transition into the middle of the day. Then the middle of the day is this trading range with a slight bias downwards. Then once we start to leave the middle of the day, the trend continues and it breaks out again and it goes lower down here. So between those transition points of the 3 times of the day, you get reversals and you get continuations. So like if the market's going down at the beginning of the day and then it goes into a trading range, well then once you get to the end of the day, the market might continue down or it might fail to go lower and then reverse up. So those kind of seem to be the best times of the day for me, is between those transition phases. Maybe today you could argue this here is the open. It's a trend up on the open. Then the middle of the day might be a trading range. So I'm going to throw a trade idea out. I'm just going to put it out there. It's not something that I'm going to take. The market has moved up here. We have a bit of a support resistance level here. So I was talking about 50% of the moves on the open reverse, and this might be the example of that. So we have strong move up, that move's reversing. Now let's say this became a good bear bar here, closing below the moving average here. This could end up being a swing short to come down here. It's lower probability. Let's say you put your stop here. You're going to lose that most of the time, but when you don't, this might not be such a bad place to be going short for a big swing. Like I said, I'm not going to take it, especially if there's a big tail on the bottom. But it's just kind of how I'm thinking of the bars throughout the day. And we have this open. Now we're transitioning to a different phase. The bulls have failed to go higher, and now we have these targets below. And we could sell for like, let's say the market starts going down, we could sell for scalps, and that'd be higher probability. Now this would be lower probability, but it'd be a swing. So I'm not going to win it as much. I'm not going to win as often, but when I do win, it's going to be a larger win. All right, take a look at the 60-minute chart. Our hourly chart might look a bit different, because if you're on the 24-hour chart, but I can still kind of recreate it. So you're talking about the bar that would be from 10 o'clock to 11 o'clock? I assume so. So are you talking about the bar that goes from 10 o'clock to 11 o'clock? Because if so, then yeah, we could imagine, opens here, tail on the bottom, um, move up and then move down. So it's basically, like I said, like a pin bar, doji bar. Yeah, so it's really interesting how, right, so we have different charts, and yet the, right, so the moving averages are different, the bars look different, yet the price action is still, um, and it's still relevant. Like my moving average is different from yours, but just look at the chart I have here. Test it here, breaks out, test it here, breaks out, then tests it back twice before heading down. But our moving averages are different, but it still presents the same. It still presents opportunities. And just like our bars are probably a little bit different because of our charts are different, but um, trading it's all fractal, so it's going to be the same across all markets, all time frames. So it's just I have my chart set up this way because I just like the context that it gives. So I'm not going to call the overnight hours. Um, I'm not going to call it noise. I'm not going to like downplay the significance of the trades that go on overnight. And like I do have my overnight low and overnight high drawn in. Basically there's a million different strategies, ways to make money, and what I found that I like is just having the 9:30 to 4:15. I just like being able to like see the close of yesterday right here, and to see the open of yesterday right here, and I can see we're getting close to it. We're about to test that, and it's just what worked for me, and also I learned from Al Brooks, and Al Brooks has his chart set up this way. So I keep saying that word context, because it's more than just like the candlesticks. The candlesticks only mean so much. It's the bigger picture, and to me that's what being able to setting up my chart this way, I feel like I have a better grasp on the bigger picture. And if I ever want to check overnight, well, I can just go to my 2000 tick, and the 2000 tick I do have it as the overnight. So if I ever want to see what happened overnight, I can just click over here and I can see that. I'm gonna peek at some other charts. So crude after 10 or so bars down like this, this rally will probably have to. There's probably going to be sellers after this. So this rally is strong, but well, as I look at it, possibly could become a V bottom because this pullback is rather strong. But usually after a strong sell-off like this with this tight channel, usually after the pullback, there's at least a little bit of follow-through. But depending on how this bar closes, then usually the sell-off gets follow-through. But if there's a tight pullback like this, then so let's say like I was planning on selling at the moving average. Well, if I see like a tight pullback up, in a tight channel, like if I see the bulls being strong on the way up to that moving average, then I'll avoid it. Gold looking like we might have so we have a trading range. We have a higher trading range up here, and it looks like we might get a lower trading range down here. So bulls that bought at this high. Two things they might have done. One, they might have bought at the moving average down here. And if so, they'd be getting out. This is their midpoint here. I would say they would buy above this bull bar, but that bull bar didn't trigger. So they would buy above that, but it didn't trigger on that bar. So I don't think too many bought in this area. And maybe some bought above this bull close. I feel like that'd be getting a bit too close for me to want to buy again there. Like after this big sell-off, after the range kind of expanded down here like this, now I'd be buying basically not too far back from my first price. Like the bears are moving the market down here, and now this is more of a pullback on this bear move. So I'd rather not be buying too far up here because this is like potentially just a pullback and a bear move. I was talking about this being a possible swing short below this, and now it never triggered, so the market never went below it, so you wouldn't have gotten, you wouldn't have actually entered there. And I made a video recently about that, about like canceling your orders if they're not filled on that bar. So this would be your signal bar, signaling that a short might be coming. Then your entry bar is the next bar that you actually get filled on. And it should be the next bar. So I don't want to sell below here and then have bad follow through and then keep my order there. Because what might happen if I keep my order and get bad follow through, it might go down a little bit, but then it'll, the odds of my trade working out are less likely. So if I place an order to sell below a bar, I want it to get filled on that next bar, not after a couple bars. in a way, it's kind of similar to the bulls that had bought through here. Let's say they bought this second close for a swing up. Say they bought there for, and they were trying to swing up here. They bought there. They had no reason to get out below any of these. They had no reason to get out through here. Then they got this big bear bar. And I think it's reasonable to get out below it, but it never went below it. So it never triggered. So the bulls, if they put their stop there, they're managing their risk. You know, they're avoiding a wedge top and a sell-off, but they're also leaving themselves the chance to stay long because, look, it never went below it. So they would have stayed in there long. So this, by using that concept, you can both manage risk, but you can also, you know, when you're already in a position, you can manage your risk by doing that. But when you're trying to enter a position, you can also avoid bad entries by kind of using that same concept. So Mike's asking, do you have a course on your method of trading? So that's something I'm working on. And when I get that made, I can definitely get that out to you guys. You know, that's something I've thought about for a while, and you know, behind the scenes, I am working on a few things. I think, you know, I think there's going to be a lot of value from the videos that I posted on YouTube so far. So until that course gets out, you know, what I've put out in the videos, I think, you know, I think there's really good information in the videos. So I think those videos will be good to kind of hold you over until a more comprehensive course comes out. And it's been a lot of fun so far working with working with traders. You know, I really enjoy working with people that are both you know, complete beginners. You know, it's like you know, I'll talk with people, and you know, they have to learn how to do the they have to learn even what a candlestick is, and you know, I kind of take that for granted, all the, you know, all the details in trading that people you know, that people have to learn. So I have two sources of income. I have I have a more traditional job, and then I also do the trading. Mike, I like your scalping videos, the past evals. Yeah, you know, I was thinking about making another video. Those have been, uh, you know, those videos have been the best on the channel. They perform the best. So I can tell, you know, that's where people have interest. People are really interested in learning how to pass evaluations. So the mini here, it's starting to look a bit like a triangle. Maybe something like this. It's not too good of a triangle, but typically with triangles, the first breakout that occurs, it will come back to the apex of the triangle before heading somewhere. So let's say we break out above here. The way the triangle should work is that it will test back to the apex of the triangle, and then from there it would head up, or it would test down. So when you see a triangle, you should expect that first. Essentially, just the idea is triangle, first breakout fails, and test back to the triangle, test back to the apex before heading somewhere else. So gold, we were kind of expecting this to be a lower trading range here, and that should hold true until we're really able to break out above this moving average. Probably a decent amount of sellers in this area, because look where we'd be at moving average. We'd be at the midpoint. We'd be at the close of yesterday. So we're getting the breakout of this triangle here. Like I said, it's not really, to me, it's not really the best form to triangle, because we only really had one test up here. But I'm still expecting this breakout up here to fail and to come back first before heading in either direction. We're also at 5,800. You know, we probably expect some sellers to be there in that area. So I'm trying to think, is the market is the market more bullish or is it bearish? I think it's a little bit more bullish. Um, we have been getting higher lows and higher highs, but I think we're entering a phase here that's gonna be more of a trading range. I think it's trading range, but I think the bias is bullish. So basically, anytime you have, I think anytime that you have like uncertainty, then if you're getting these moves where it's like, okay, it looks like we're going up, but then we're going down, and now we're going up, but we're going up, and we're having these bear bodies, then that when you're feeling uncertain like that, that usually means trading range. So I would call what we're in as a trading range with a slight bias up because of these higher lows that we've been getting. And you can see I kind of drew like a double bottom in here. Now we just have to see how this plays out. And it's always okay to wait for more information. A trade is never due. Taking no trades in a day is better than taking trades where you're really not following your strategy and where you're really not confident in it. People talk about like with trading, you can beat the market. So let's say the S&P returns 8% in a year. When you're trading like a relatively small account, let's just say from like 50,000 to like $1 million. If you're like in a small account like that, I mean, I think an expert trader could get 30% or more a year with an account of that size. When you're trading with larger numbers like 100 million, a billion, or more, then the long-term returns get closer to that 8% average for like the S&P 500. I was going to say something else about that. I'm trying to think where I was going. I think what I was going to say was for you to be able to. So yeah, what I was going to say was our goal, especially with a smaller account, but like between like 20,000 to $1 million account. So if you're somewhere in that range, your goal should be to beat the market, and you should be able to return like 30% a year or more. That's what like an expert trader would be able to get. And so if the S&P is up 8% a year and you get 30%, then you're beating the market. Now, think about beating the day. Okay, so let's say the market is down for that day. It's down 1%. Then let's say you didn't take any trades. Let's say you have a strategy and you were disciplined, so you didn't take any trades that fell within your strategy. So then you were zero. You were 0% for the day. Well, you beat the market, right? you beat the market by not taking any trades. So in a way, like if you're not taking trades because you didn't feel like your strategy was there, you weren't feeling confident in it, well, then half the time you're going to beat the market by doing nothing. So If you're uncertain, then just wait for that right trade to come to you. The trade should come to you. You shouldn't be having to try to seek out the trades. So I think, so looking at this, like the triangle started here. So here's the start of the bottom part, and then the top started here. So then here's one test on the bottom, one on the top. I probably would have wanted one more test on either side. So maybe if this had come down here, and then we broke out above. So, probably just one more test would have been okay. It's because, like, how much of a triangle shape is this really giving after just one test on both sides? Not too much. Now it looks like what we said was correct. This breakout happened and it pulled back to about the apex. So now we can look for it to either continue up or break down. But I probably would have wanted just one more, just so that it gives other people as well. So there's an increased chance that other people will also draw the triangle on their chart. Like the better that the pattern looks, the more likely it is that other people are doing it, and then the more likely it'll play out. So probably just one more test down would have been sufficient, and then I would have been more confident on, that triangle being like that. But we can see it, this was enough. So the market saw that this was enough of a triangle, and it played out there. Do I look at the 4-hour chart? I really don't look at the 4-hour chart. That's probably because I do just trade intraday. And, the 4-hour chart just be like 2 bars during the day. I can pull it up. I'll add a 240-minute chart. So on the 4-hour chart, big sell-off, pull back to about the midpoint, pull back to the moving averages, pull back to 5,800. So probably sellers in this area on the 4-hour chart. And I was kind of touching on this earlier. It's really interesting. I mean, everyone's trading all these different time frame charts. They're trading tick charts. They're trading 4-hour charts. They're trading charts with 24 hours on it, or some are like me. They're just trading the intraday chart. But yet it's still the same. Essentially, it all works out. I mean, I'm just on my 2000 tick chart, and 200 moving average pulled back 200 and tested right there before bouncing up. All right, I'm going to go ahead and get rid of this apex get rid of the triangle there. All right, guys, so I'm going to go ahead and be off until 12:30. Okay, so I'm going to end the stream, and then we'll be back at we'll be back at 12:30. It's probably be good to be away from this. Like if I'm here, I'll probably be tempted to like try to buy below this bar or sell above. This is a trading range. These are but it's the type of trading range that is looking for a breakout. So when you have these bars that are like, it's overlap, but they're large bars, they're looking for a breakout to happen here. So it's not just going to stay in this range for the next, rest of the day. It's going to break out in one direction or the other. But until then, we're getting into kind of the middle of the day. So I'll go ahead and take a break, and I'll be back. I'll have a new stream up at 12:30. And I expect us to be able to get some trades in later today, once a breakout occurs.